Our policy summit is taking place November 18th in Washington, D.C., and we thought our agenda is jam-packed. Let's get the conversation started early. So hence we developed this 4 webinar part series. This is the second webinar of the series, and so we're going to be talking about RegTech. So this webinar is in collaboration with Lumio. So I'm going to kick it over to Ed Vincent, who's going to get the conversation started.
Denise, thank you very much, and I appreciate everyone taking the time. I know it is a busy week in particular, but we're excited to dig into this hopefully pretty meaty topic here today. As Denise said, welcome to our webinar on the RegTech revolution, redefining compliance for every bank. I might broaden that title a little bit and call it redefining compliance for every community financial institution, so we can include our credit union friends here as well. As Denise mentioned, I look after the business at Lumio Solutions. We are a risk and data management platform that is designed to empower community financial institutions to enact risk-informed decisions. So think of business intelligence and kind of AI-enabled data in the hands of those folks in the first line out in the business. We've got 3 learning objectives today in areas that we're going to explore. Number 1, how do RegTech solutions, how are they redefining compliance strategies for banks and credit unions? Number 2, practical approaches to solving compliance challenges with technology. So we're going to get into a handful of specific use cases here. And then number 3, we're going to talk a bit about emerging trends that are going to shape the future of compliance technology. I've got a fantastic set of panelists here with me here today. I will give them a quick intro and then ask them to grab the baton and talk a little bit about their businesses and their background, and then we'll get right into the conversation. Anna Fridman is the co-founder of Spring Labs, and Anna is a former chief compliance officer as well as someone wearing a general counsel hat today. So Anna is particularly well qualified to opine on the topic at hand. Anna, will you?
I don't know about that, but okay.
Well, we'll see. We're gonna put you on the hot seat. We're gonna figure that out. Maybe we'll take a poll at folks at the end, and we'll get some audience feedback on that. But why don't you share a little bit more on your background, if you would?
Sure, Ed. Thank you so much for the intro. Too generous. As Ed mentioned, I'm co-founder of Spring Labs. We focus on AI-powered powered process automation of the back end of financial institutions. So our leading product is an AI-powered complaints and customer feedback management system that helps customers much more efficiently tag their complaints, organize them, categorize them, and create the scaffolding for responses to customer feedback. So just making the process a lot more efficient every step of the way.
So
excited to be here.
Yes, well, and a real meaty topic that we'll unpack that, right? Those customer complaint issue in a few minutes. John Zanzarella is the Chief Revenue Officer at PerformLine. John's got deep experience around customer acquisition. It's not a way of me calling you old, though, John, to be clear. But it's certainly an area where compliance is key, right? And now you're leading the charge at the only omni-channel sales and marketing compliance provider out in the marketplace. So John, will you share a little bit more on your background as well, please?
Yes, will do. Thanks, Ed. And thanks to Denise and the AFC team for hosting this event, inviting PerformLine to participate. As Ed mentioned, I'm the Chief Revenue Officer here at PerformLine. I've been with the company a little over 8 years. And during that time, we've supported some of the world's largest and fastest growing banks, fintechs, credit unions with an automated omni-channel solution for sales and marketing compliance oversight. So that includes helping automate the approval of sales and marketing content before it goes to market, as well as the ongoing monitoring and discovery of our clients' customer communication channels. So web, email, social media, calls, and messaging, looking specifically for any potential brand or regulatory risk. And I was telling Ed earlier, I flew in from Money 2020 overnight, so I tried to find a filter that makes me look not so tired on here. Hopefully it's working.
It is working. We will make sure to keep you awake here, John, with an engaging conversation. Thank you very much for joining us. Great to have you. And last but certainly not least, Kunal Datta is the head of product at Unit 21. Kunal, you began working in the AI space 7 or 8 years ago, well before it was cool. So you're a trendsetter there, and now you're bringing that experience to Unit 21, where you guys are focused on lowering fraud loss and streamlining AML compliance. So, Kunal, I'll pass you the mic and ask you to share a little bit on your background, and then we'll jump into the meat of today's conversation.
Yeah, absolutely. And thank you for having me here today. So Unit 21, for those who aren't familiar, we work with banks, credit unions, fintechs of all shapes and sizes, crypto companies, really across the board, specifically for anti-fraud and then anti-money laundering. We have a bunch of different products, things like real-time rules engine, device intelligence, transaction monitoring, case management, customer risk ratings, the whole gamut around AML as well. And then more recently, over the past few years now, we've been experimenting with it, but recently been launching a bunch of products around AI agents to actually automate manual workflows. So this is, if you have a team of, let's say, 10 people doing, manual alert reviews, you can do the same number of reviews now with one person. That's really what it is. We recently launched also detection agents on that side, so like rule recommendations using AI, and really AI across the board to like do jobs that normally, would be done by people spending a bunch of time doing that, and can free up people now to do other things.
I know it feels like we might have already covered the AI topic, but we will cover more of that as we get into the conversation. Clearly, it's something that all of us are embracing operationally, but then also in our products, and we'll talk a bit more about that as we get into the conversation. Thank you for that intro, Kunal. All right, I'm going to kind of kick off our first segment of conversation here around looking and talking about RegTech solutions and how those are redefining compliance at a strategic level. So how is technology really changing the compliance playbook for banks, credit unions, and fintechs? And I'm gonna ask you to kick us off here and start with your thoughts on the shifting regulatory expectations around complaint management, right, which you teed up earlier, and how are RegTech solutions changing the approach to compliance here?
Sure. Well, as I'm sure all of the participants know, like that one of the most prominent ways that regulators look at you is through your complaints, right? Like that's how regulators get clued into your issues, and that's a large indicator for when during bank examinations, during any type of audit, one of the first things that they ask about, what about your complaints, right? And the expectations are changing. Currently, in the past, you could have self-reported complaints. There are databases like CFPB database with complaints, but more and more automation is being required, right? So the regulatory expectations are now that you're going to find your issues much faster than you were doing before. The expectation is that you're going to respond faster. So it's on you as a financial institution now to find your issues faster, right? So you need to figure out ways to automate. So I think there's some talking about regulatory shifts. There's some consideration that maybe federal government will not be as strict on complaints and compliance overall, right? There's this conversation that maybe this administration will be a little more I don't know what the right word is, but maybe flexible, right? But I think that hasn't necessarily been the case, right? Like customer complaints, for example, have always been in the center of what regulators think about, and continues to be. And also, if the federal regulators are a little less prominent, like there are some sort of consideration around CFPB right now, it is customary that state regulators step up their enforcement, right? So the sort of how the agencies work with each other is also a flow that has to be considered. And historically, when one regulatory body is a little bit less prominent, other bodies step up. So I think nothing has really changed about the expectations, except that you're now expected to do things faster and better.
I like that description there, that the leadership perhaps has shifted from kind of one spot to another spot, but the expectations are still there. And right, given the world we live in, everything needs to be faster, right? So finding the issues, responding to them, right? That is a common theme. I think we see it across the board. John, let's build on this theme of transformation and how RegTech solutions can help kind of shift behavior in the compliance space. And this idea of moving from a reactive one to a more proactive one when it comes to compliance. So that's going to, I think, have staying power beyond any sort of administration or regulatory shift of kind of getting off the back foot onto the front foot. So can you talk a bit about this shift towards a more proactive approach, and perhaps share an example of how that's playing out in the marketplace?
Yeah, I think we've seen a gradual shift. I think back to, PerformLine's journey, and we started working in the financial services space in 2013. And like Anna mentioned, that was a big time. The CFPB had been created, the Dodd-Frank Act was enacted, and we saw and encouraged the growth of the compliance function and the evolution of the chief compliance officer and their processes. But at that time, many of the companies we talked to were largely doing manual review processes, which proved challenging for a variety of reasons. And I think companies started to see the benefit in automation, in scalability, in data insights that allowed them to be more proactive and identify risk before it was too late. But not everyone was a believer. And I think under the last administration, we saw heavy enforcement, we saw challenging audits, and companies whose growth plans in some cases were halted by being reactive instead of proactive. And we used to say under that administration, there were kind of three ways that we would work with a new customer. Number one is that they were being proactive, and before they launch a BaaS program or a card product, they would come to companies like PerformLine or Spring Labs, and they'd say, hey, how can we get ahead of complaints? How can we get ahead of sales and marketing compliance? In some cases, they were, told during an audit that they had deficiencies in certain areas and they needed to improve those. And in other cases, and this was never our favorite, but they would get hit with a consent order. And in that consent order, they would have to adhere to certain specifications around their monitoring program. And so I think from those 4 years, more companies started buying into a proactive approach. And even though, as Anna highlighted, the regulatory environment has changed, we've actually seen a lot of companies continue to lead with that proactive approach and continue to invest in compliance. And I think the lower maybe enforcement action has also opened other doors. We've seen, and this is, again, was reiterated when we were at the event this week, but more companies increasing partnerships, launching new products. A lot of them are launching crypto products, stablecoin products. They're launching new marketing channels like influencers and affiliates. And that marketing motion really can't happen unless you have a great partner in compliance who is being proactive and has the controls in place to allow your business to do that responsively. And when you think about proactive and being strategic, a lot of the conversations we had were with companies who said, hey, we want to launch a digital asset product in the next 6 to 12 months. How can we make sure that we're monitoring appropriately when we go to market on that? So it does seem like the proactive approach has stuck.
So it's less about kind of covering your flank, and it's more about saying, look, this is actually a way that we could win in the marketplace if we do this well. We happen to be covering our flank, but we also are going to differentiate and potentially open up doors if we lean into this and we get onto the front foot.
I think so. We talk about compliance being a catalyst for growth, right? Being a partner to the product team and the sales and marketing teams, and I think we're starting to see that at a lot of financial institutions.
I like that. I like that terminology, and hopefully some of our audience will take that back and amplify that message that compliance can be a catalyst for growth. I think that's a great phrase. Kunal, right? We're in a world today where payments, transactions, right, movement of money is just accelerating right by the minute, right, at an incredibly fast clip. So there's an increasingly large number of opportunities for fraud out there in the marketplace. How should a community financial institution think about scaling its compliance activities in these areas?
Yeah, it's a great question. I think with a larger volume of activity, comes greater risk, like more surface area as well. I mean, it also is true for like if you're building new products as new things are coming out in the market and putting those out there. Now, with that, normally you would think, oh, I got to scale up my team. But I think like now that like AI has sort of changed the game on that. I mean, what we're seeing, now with our AI agents is like massive reductions in like handle time or the number of alerts like that can be reviewed by a person in a given amount of time. And I think what that is like you have this previously there was like this trade-off, we talk about between how safe you want to be and like how fast you can move. And the safer you want to be, the slower you got to move, kind of thing. But I think that is no longer true with the sort of technology unlock.
those two dynamics there of this trade-off between growth and expense. So it's no longer a situation where you need to take on that expense in order to grow. As you said, you can grow in a scalable manner there, and
That's right.
right, you're not constrained by access to people and resources, right, in a hiring market, an onboarding market. It
Right.
totally changed the equation there, alongside the other dimension there of speed and safety. So I think those are two really interesting sets of levers there. Let's take these conceptual ideas now then, and let's go down a level, if you will, into some practical applications and practical approaches of drilling into how our innovation is addressing common compliance pain points. I'll start out this kind of topic with one of the things which we're seeing at Lumio, where community financial institutions are enacting a modern data platform. We think of that as really a data warehouse, data ingestion tools that aggregates data together from multiple systems, including your core system, your GL, your fraud system, or your marketing compliance system, or your customer interaction system. Right, getting all that together, creating a holistic picture, overlaying a risk profile, and then empowering your folks on the front line with insights to enact risk-informed decisions. So the days of routing all these inquiries back to a risk management team are waning. Instead, the folks on the front line now have visibility into timely data, and they can enact decisions themselves in a timely manner. So in a sense, everyone at the institution is now responsible for compliance and risk management. It's not sitting in this central area. So I think that there's that's an example that we're seeing and living here in our world. John, AI is often discussed as a game changer in this space, right, for compliance and risk oversight. So can you give us your view into where AI can deliver the most immediate practical impact today, and maybe also the risks or limitations that the financial institution should think about as they are going down this path?
Yeah, absolutely. I'll talk a little bit about how we think about AI and how we've worked with our clients around, adopting and some of the practical applications. But, we've been investing heavily in AI, but we've always tried to do so thoughtfully, conservatively, and grounded in what we know about working with regulated companies. In banking and finance, it's not enough for technology to just be powerful. It also has to be responsible, explainable, and auditable. And so, we've seen and we've heard from clients who've had some challenges with AI first or AI only solutions that maybe are newer to market and don't understand the intricacies of a model risk review or what it's like to be audited by a federal or state regulator. So I would encourage, the folks on this call, do your due diligence. AI without guardrails can actually introduce new risk like bias, hallucination, false positives that actually slow down your compliance work. But if you have an existing RegTech solution, you can definitely be a part of their AI strategy. That's something that we've opened the doors to our clients. We want to hear from them. Hey, what is your company's view of AI? We've heard everything from, hey, we're still not ready to jump all in on AI yet, to we're actually getting reviewed in our annual review based on how much AI we use on a daily basis. And that was a big shift from a couple of years ago, especially for some big financial institutions who were much more risk averse. I think everyone's kind of in their personal lives started using AI and seeing some of the benefits there, and companies are starting to embrace it. So I think for us, we've had our CTO on more calls with clients in the last year than we probably had in the 5 years before that, because everyone wants to hear about what we're planning from an AI standpoint. So I think it's an exciting time for companies. If you have an existing RegTech vendor, they're likely doing some AI things. So be a part of that journey and just be cautious as you're looking elsewhere. But from a practical application, I think what we've seen is AI has certainly helped with some of the complex challenges when it came to sales and marketing oversight. It's helped in the process of content review. We've seen more clients leveraging things like contextual analysis of video. So not just the transcriptions, but actually what's going on in a video that they might use for large scale marketing or across social media. We've also seen it automate monitoring processes of consumer actions. So think about if you are buying from a buy now, pay later company, and you need to go through a checkout experience, and across multiple clicks, there's different disclosures and APR rates that come up and things that you need to agree to. And so AI has given our technology the ability to be part of that customer journey in a way that was really hard before that technology was available. We've done a lot with AI rule building at PerformLine, being in business for over 15 years. We have billions of compliance observations in our data, and so we're using our own data to help train models and provide insights to our customers. And that's just in the sales and marketing compliance space. We've seen peers in AML, KYC doing some really exciting things with AI as well. So it does seem to be becoming more synonymous with RegTech.
All right, you've got a handful of real practical applications there, whether it's content review, right, conceptual analysis of videos is a great one, right, monitoring consumer interactions, building building models. Kunal, let's bring it over to you, right, where clearly staying compliant is non-negotiable, right? You've got to adhere to these compliance principles. How does Unit 21 think about approaching this in a way that also is going to build trust with auditors, examiners, those stakeholders that you need to have on side along this journey?
Yeah, absolutely. It's, we found in talking to folks, it's not just about the efficiency. The efficiency gain is great. But the other side of this is also, efficacy. And when I say efficacy, what I mean there really is like the quality of the reviews. And, it's interesting to see sort of like comparisons to the world of like self-driving cars where, you had at a time like, people sitting in the car actually, making sure that they're driving right at first and then eventually no longer holding onto the steering wheel. When over time you have enough data to prove that actually it can do as well or if not better than a human. The interesting thing I think in this space, at least with us, right, like we've had this platform, like actually people doing like normal human reviews of alerts in our platform for like years now, and using that data to actually evaluate, the efficacy of the AI agent. I mean, that's been a really helpful tool for us because now we can actually go back and say, like, on this process across like whatever the billions of alerts that we've done, this is how the AI would perform. Or even things like, recently we released decisioning, AI decisioning. And the way we did that was before we put that out in the front end for users to see, we just stored it in our database to see like, okay, let the humans actually do the review and make the decision on their own. And then we'll compare like, how's the AI deciding? And what we're finding is like, I mean, it really depends on the process, right? And of course, like for us, like I think being in the compliance space, like quality is paramount. So we can only release anything to a customer of ours when the quality is at a high bar. Otherwise, there's the chance for things like automation bias, where like people might like intrinsically trust the AI if they've seen maybe 5 good examples, but maybe the 6th and 7th and 8th example might not be good. So you want to make sure that like we have the evidence, to like actually put something out there that's good, because we know that like humans, are sort of fallible creatures and may end up trusting something when actually it may not be worth trusting. So, I mean, if anyone is looking for AI vendors, what I would highly recommend doing is like ask them about their evaluation sets. Like, how are you evaluating the quality? Right? What is your eval set? This is sort of the term that people use, right? And like, where did you come up with that? Um, I think that can be one of the most like eye-opening answers if you're evaluating the quality of any AI product, like even outside of the RegTech space.
I think that. Sorry, go ahead, Anna. Jump in.
I know. I just wanted to jump in, and Kunal couldn't agree more actually with what John and you were both saying. That I think it's interesting to see all these players jumping into AI space, including the financial space, but. A lot of people don't come from this world, from this background, and there are so many intricacies. So I'm always sort of boggled what is the plan, right? Because you need to understand the space, you need to understand the compliance expectations. It's a very particular beast, as we all know, right? There are all these considerations for vendors, and sort of making sure that what you're putting out is quality and validated, and you tested with humans, right? Like how you were saying, Kunal. I think that makes perfect sense. And I think another thing that we're always think about in this world, in the financial world, is risk-based approach, right? Like how much focus you should have on something depends on the risk, right? So all utilization of AI is not the same in the financial space, right? Like, for example, scrutiny on things that are more customer facing, like underwriting, is it has certain weight, and then back-end analysis for compliance purposes, if it has a human in the loop, has different weight, right? Just so starting out, first of all, with having people work for you who know who have background in the space, it's very, very particular. I think it's very difficult to build a product not understanding the background of the space. You have to make sure that the product works as it should. You should know what it should look like on the receiving end, right? Like what should it look like? How can you assert claim quality if you're not quite sure what that would look like? But also thinking about the proper place to integrate AI, because it's not, there are certain areas are more high risk and other areas are less risky, right? So thinking about that on the front end.
And I'd like to come back and ask you a bit more about the proper place to integrate AI, in particular around the space that you play in. But before you do that, I want to go back to your comment there about a risk-based approach, because it was something we talked about in one of our prep conversations. Kunal, you brought up this idea of levels and levels of automation, and I thought that was a really great way of explaining this and kind of putting that construct out there. Will you talk a little bit about that whole idea of levels of automation?
Absolutely. Yeah. So this is it's borrowed from the world of self-driving cars, which I think we have a lot to learn from, actually. I mean, not just there, there's also other places to learn, right? Like where they've gone through these kinds of transformations, like way before Gen AI. So like radiology actually is, I think, a really good example of this, as well as literal autopilot, like in planes, where, this was one of the first places where this kind of automation was rolled out and in sort of a life, a life or death kind of situation. So I mean, the basic framework is as follows. It's like it's not black or white, right? It's not either automation or no automation. There's the level 0 through 5. So what is level 0? Level 0 is you drive your car yourself. So just like normal, right? You go and you come back, and you have full control over the vehicle. Level 5 on the other extreme is you can like go to sleep in your car or like read a book or watch a movie or do whatever you want to do, right? And it'll get you there and do all the things and it'll do it right and you'll be safe. But in between, you have all these other levels of automation. So a simple example of this is like lane assist is like a level 1 automation. There's a lot of cars nowadays have lane assist, like most cars do, and it'll sort of buzz you when you're like kind of going out of your lane, right? Or another one is a cruise control, like an early version of level 1 automation, right? Another one, like even simpler, is when the lights, like when it gets dim outside and your
Right.
lights automatically turn on, like that's automation, right? Like
Right.
that's been in there for a while. And these are all controls that normally a human would have to do, but you're still like kind of driving, right? But now as you add these up, right, you can start to see how the human involvement can kind of reduce a little bit at a time, right? It's not like all or nothing, like it's driving or not. It's like, okay, first maybe I'm comfortable with lights being automatic, right? Then maybe I'm comfortable with like lane assist. Then maybe I'm comfortable with the accelerator or braking happening. Then maybe I'm comfortable with like the full-on steering being taken over, but I'm not fully comfortable with it taking over all the time. Maybe I want to be there for extreme scenarios, and I want it to escalate it to me in certain situations. And then finally, over time, with enough data, I'm fine with level 5 automation, right? So this is one axis, I think, is like the level of automation. The other axis is the process itself, right? And kind of what Anna was touching on earlier is like not all processes, like you may not feel comfortable as well in all processes, right? So what we see, for example, is depending on the company, like certain tasks, that's how we break it down, at least in our product, is like what task do you want to turn on and off, right? So you can have an agent that does like a sanctions task, but you can have an agent that same agent can also do like behavioral deviation if you wanted to do, or like impossible travel as a task, or like narrative writing as a task. And you may be like, all right, you know what, for my sanctions alerts, like I'm down, it's like a name match. And I'm fine with it just like escalating to me when it sees something that might be sus. But there might be organizations who are like, you know what, actually sanctions can be pretty bad. Like if I miss something, I don't want to miss anything. So I'm down to review all the false positives. I mean, to each their own.
Right.
And I think that kind of flexibility is actually pretty important because each organization has different priorities. And like talking about risk-based approach, like what does that really mean? It's like, what do you think? That's really what it is. It's like if we're being honest about it, it's kind of a matter of opinion to a degree, right? Like what is your truly like what is your feeling on risk? And you should be able to have the control to automate where you think it's worth automating for your organization, rather than just like giving that up because of some promise of efficiency, which I mean, efficiencies are great, right? Like, don't get me wrong. I mean, we're building all this stuff, but I think doing it safely and in a way that you feel that control, in addition to things like transparency, right, and auditability, like how is it making the decisions, the ability to test, right? Like, so you know for sure. So it's like a zero trust environment, right? You can say, I don't need to take the vendor's word for it. I can see it for myself. Like these kinds of things, I think are very important. But I don't know, did that answer your question, Ed? You asked me about levels, and I went on a bit of a
I think
TED
that's
talk.
great. I think that, right. Well, you levels is one axis, as you said, another axis,
Totally.
right, of the processes
Absolutely.
themselves, right? And then tying back that back to the fact that if you're taking risk-based approach, most institutions have their own unique risk appetite or right,
Yes.
and risk profiles. And so I think that this dynamic that it's not one size fits all is a
Right.
really important one.
Yeah, and I think actually that's what where AI kind of excels. You know, automation has been around forever, right? Like, I mean, the simplest things, right, in our lives, like have automation in them. Like a coffee machine is automation, or a washing machine is automation,
Right.
right? But I think what LLMs are uniquely good at is like that, what I will call the last mile, right, of like flexibility, where like something like a let's say like just you know, any sort of like if this and that kind of system may not work, right? And even ML is not really great at that because it's like based on like hundreds of thousands of examples. But you know, if you tell something once to an LLM, like one-shot learning or few-shot learning, this is sort of the concept, is like with like a small number of examples, it can like tell you what, like it can extrapolate is in essence, right? I think that's really good, uniquely good at like fitting to your data, your organization, your processes, in a way that other types of software previously could not do.
Yeah, that last mile characterization, I think it hits the nail on the head. And I'm sure, you know, John, you went through some examples there before of looking at, you know, different marketing use cases. Everyone approaches, you know, their marketing materials a little bit differently. I'm sure, right? They're positioning themselves a little bit differently. They engage with partners in a different way, and so I think that probably applies equally there in the marketing space as well. That they need to be flexible and configurable and apply it to the unique use cases of a financial institution.
Yeah, I think you're right on, Ed, and we always say that same thing, that each of our clients has a different risk tolerance and risk profile, and you know, we try to provide the technical solution and let them customize it to that risk profile and get the insights that they want and have the technology work the way they want. But I thought what Kunal said was really interesting about, you know, the client doing their own level of validation on it as well. And that's one of the things that's been interesting for us to see, is that you know, not some of the banks are learning, you know, pretty much on the go. They're building out model risk review, and I would encourage the RegTech vendors. You know, we had years and years of going through third-party risk review to even work with a bank, and we built out processes and answers to questions and all this information and data that we would give them in advance. You really have to do the same thing with your AI program, with your models, and be prepared to go through that diligence. And in some cases, you know, banks haven't done a lot of that before. So you really need to partner with them to help them understand what is the best way to validate and review. What data are you using? What data, if any, is going into an LLM? So that's been something we've been learning alongside our bank partners, but something that we're also, you know, very proactive about. We want to have those conversations. Like I said, we have a CTO who's very willing to jump on, like Kunal, and speak to a client and explain some of what's going on. And that seems to help quite a bit.
Yeah, Anna, you similar to what John was laying out there, right? You talked about the proper application of AI, and so I'm interested in, right, you know, you spend quite a bit of time here in this space of customer interaction, where, you know, automation and monitoring solutions certainly can yield, I imagine, efficiency, but I think go back to the efficacy comment there that Kunal made as well. So can you talk a bit about you know, a couple of practical applications there within the space that you play in?
Yeah. So I would just say, like, one of the things that Kunal mentioned is this idea of of what can be done with AI, right? One of the small things that I can describe that's useful for us in our complaints analysis is emotion, right? Being able to detect emotion and like figure out how to like, what does that mean? It matters in a customer phone call, for example. It matters what the customer emotion is. But so we have like, this is an example, like a very specific thing that we're now able to do that is valuable, that was like challenging before on a large scale. So figuring out how to figuring out these unique specialized niches for which AI is very good. And I apologize. Can you also? I'm just so I'm like trying to think of you kind of had a second portion.
Yeah. So
to this question.
give us a use case, a specific area where around customer complaints where automation and monitoring is really yielding efficiency or cost savings or scalability.
Oh, definitely. So many, right? So this is I just gave an example on emotion, right? But to be able to properly tag your complaints, we constantly measure our output, compare it to human output, right? And we test it on the back end. So the ability to properly tag a complaint, right, with what regulation do they belong to? What is the entire substance of the complaint? We've proven, frankly, through automation, we're able to do it more accurately than a human, right? And having that to be a layer on top of your human interaction, a lot of regulatory oversight currently talks about the fact that you still need a human in the loop, right? But building on those efficiencies, and we're looking at the fact that when you think about complaints responses, when you look at from agent to agent, there's variance from agent to agent. There's variance to how they respond in the morning versus in the evening. And standardizing their approach to complaints, helping in the background with automation to standardize the approach, to categorize consistently every day, that it doesn't matter what time of day, it's categorized the same way. The fact that you can aggregate from different modes of contact, right? From chat, from phone calls, from emails, organizing it quicker, right? And creating a scaffolding for scaffolding of a response for your customer service folks, right? So they're able to do less of that day-to-day routine work and more focus on things like root cause analysis, right? Like that's the next expected thing that's expected from you by regulators, is to figure out why are you having the issues? Where are you having the issues? So to free up those customer service representatives to focus on things that matter more, right? To take it to the next steps, to simplify the simple steps and focus on the things that matter.
I love I think some of the themes there, right, that we probably all, I would say, intuitively make sense and probably would get to quickly ourselves. Consistency, accuracy. I love the morning versus afternoon, or one agent to another, right? And you can actually create some normalcy and some consistency. But the idea of entering new domains like emotion, right, which we probably would all say that doesn't immediately come to mind when we think of data and analytics, right? It's kind of the 180-degree polar opposite, other end of the spectrum, whatever you want to say. But to think that we can apply some technology to that and interpret that is immensely powerful.
Oh yeah, if the customer is super angry, you want to know, right? And if you have
absolutely. I'm going to be a lot more careful now the next time I call in, because I think that I've now got a profile out there that now it's detectable by technology. Well, so I appreciate that, Anna, and I like the last bit there of really giving people the time then to spend on the root cause analysis, right? The understanding, the interpretation, that ultimately that's the value add. The value add is not the data munging per se. It is the interpretation, and then what do you do from there? So let's get to this concept of being a bit more forward looking here and an emerging theme. So let's wrap together, right, the practical applications, the strategic changes in how we think about compliance, and let's pivot beyond what we're seeing today. So Anna, I asked you there a bit about use cases that are in the mainstream, if you will, right? What are we doing today? But I'm going to challenge you and then, John and Kunal as well to look even farther forward. So, what are the trends? What are the use cases that are likely to emerge that are not right in front of us, or we're not tackling at this moment, but people need to be thinking about what's coming soon?
So I think I'm just gonna call out like a general category, and I'm not sure if it's not being attacked, but there was we found this McKinsey report that talked about that 61% of post contact work can be automated, but only 10 to 15% currently is. So if you think about it, that's a huge discrepancy, right? I think they estimated that's a $6 billion worth of value, right? So this idea of post initial contact automation for long tail workflows and organizing and structuring that data, I think is a deep opportunity for the future. And there are a lot of things that would fall into that, but that is a huge space for potential for automation that is now available.
I think those are staggering. That's a staggering percentage and an actual amount of spend or value that could be realized there. John, thoughts on your side around emerging trends?
Yeah, so I would say one of the ones that we follow, being in more of the sales and marketing compliance space, is just consumer behavior. And consumer behavior is changing, right? Similar to how we saw when the internet became more widespread. We're seeing a lot of people move from traditional search to large language model queries. I know personally, I don't use Google search nearly as much as I used to. I think if every one of us looked at our own company website traffic, the Google search would probably be down. And people are making financial decisions today based on prompts that they're putting into ChatGPT. And so we think about a future where our clients get visibility into, the results from those prompts and can have insights into brand compliance and regulatory compliance. We also think there may be a world where there starts to be a paid advertising function to some of those large language models. And if so, the big banks will be some of the first companies that are asked to advertise on those channels. And we want to make sure that, we're there to provide them the same insights that we do today across their customer acquisition channels.
Those are certainly some forward-looking thoughts. We're living this journey now in our shop of moving from SEO to GEO and making sure you're ready for generative interpretation by search engines and LLMs, as opposed to the traditional search engine optimizations of the past. And we think about where are we going to place our bets and make our investment, and that's certainly an area we're pivoting towards. The idea of paid advertising into LLMs is a fascinating and incredibly intriguing one that certainly carries technical, but then compliance questions around it, but then also the kind of the ethical and the disclosures and everything that comes around that. A really interesting space. Kunal, thoughts from your end around emerging trends?
Yeah, I think one thing that we're seeing is scams. I mean, AI on one side, it's like we're talking about this here in terms of like how do we use this in terms of software, but like fraudsters are doing the same thing, it's not like there's one-off fraudsters here and there. There's like full-on organizations, right? And they're using this technology in ways that they're not inhibited by regulations, right? So they can move like really, really quickly. I mean, one thing I'll say, like practically today, right? If you're listening to this and your organization still has like voice recognition, that's done. Like game over already. Like that's dead. So like practically, like please, like take care of that. Other stuff though, like I mean, voice agents for sure, right? Like agents actually taking actions on behalf of people. But on the scam side is like impersonation scams, right? There was a recent report I was reading from I think it was the FTC, that I put it out, where it was like basically it's the number of people who have lost people over the age of 60 who reported to have lost more than $10,000 in a scam, like like fourfold since 2020. So we thought COVID was bad, right? But like, and it was, right, with the rise of pig butchering scams, long tail, like 2-3 year relationships that these scammers will build. I don't know if you ever get one of those texts that says like, "Hey, have you picked up the laundry?" Or it's just innocuous, like, "Hey, how are you doing today?" That's what it is. And that kind of scam, I think, and now especially with video generation, being able to put like it's absolutely insane, right? And I think like if the fraudsters are using that technology without actually adopting that technology inside the institutions that control the flow of funds, it's the door is being left wide open in a city of thieves. So I think that I don't know if that's a trend, and something actionable. I hope folks listening consider that.
Right.
At a minimum, there needs to be awareness to that. You've got to think about it, and I think how you respond to it and the action you take is probably a far more complex topic. But at least having awareness and calling attention to it, I think it is important. I'll ask folks here, and I think it was you who mentioned earlier the get my notes right, the state versus federal dynamic, and right, the pendulum swinging from one side to the other.
Yeah.
Any thoughts from this group on that, the regulatory space there and trends around compliance?
I can jump in.
Yeah.
I would say I think we haven't touched yet on the AI regulation, right? There's been some commentary by federal agencies, but there have been laws that have been put out by states. But and maybe that will change in the future. But so far, my read of the regulations is basically you cannot utilize AI, Gen AI, to circumvent existing regulations. I think that's been the undertone that I have seen in all of them, is that you can't use Gen AI to circumvent fair lending. Just because you use technology, it doesn't mean that the laws don't apply anymore. So this idea that make sure that whatever you do with AI, Gen AI complies with regulations. They're still big on the idea of human in the loop, right? Making sure that there is some oversight by a live human being. Which makes sense. And obviously data security. There's concerns about data securities and making sure that companies are following proper procedures, have proper policies in place. So I think that's the sense that I'm seeing of all of the commentaries. They kind of come down to this.
Any other thoughts on AI regulations? If I've got one question that came from the audience before I get to that. Any other comments on that topic?
Yeah, just one thing I think quickly on this is like, regulations, like, we can all speculate, but we have no idea what's actually going to happen. There's like tons of bills floating around across all kinds of AI regulation, right? And it's changing all the time, right? But just as the technology is shifting, and sure, it'll lag. I think the one thing is like consider like what are the things that will not change, right? Like we know that transparency, that's not something that no one's ever going to tell you, like don't be more transparent, like be less transparent, please.
Right.
That's something for sure. I can take a bet on that and I know I'll win. So, I mean, things like that, right? Or like stop auditing your stuff. No one's ever going to tell you, like, don't keep an audit trail, right? Like, for sure, keep an audit trail. No one's ever going to tell you, like, the quality doesn't matter. Like, of course, the quality matters, right? So, these things, like, there are certain things that we can predict, like, with like very high degree of certainty that will be true, regardless of what the regulations are. And I think as long as we're sticking to those first principles, right? Like, it shouldn't, regulation or fear of regulation should not be an inhibitor to, the use of technology. And the reason I say that, right, is not just like, yeah, everyone should use cool tech. It's like, no, like bad actors are using tech, right? Like, I mean, I talked about it before, and clearly this is something that I care about. I guess I've said it now in 2 questions, but I do think it's important to adopt the same technology that's being used for the gains that it can provide, of course, but also to make sure that we're combating bad actors in that way. And then making sure that you're sticking with the first principles that you can be sure will be true, regardless of any regulation changes that come.
Yes, I was on a podcast earlier this week, and someone asked me for a synopsis of how I would boil down a message to folks, and I said, "Move now" was my message, because to your point there, Kunal, right? The bad actors are moving now, and they are investing massively in compliance and in beating compliance, and so maybe our audience isn't going to get it perfectly right, or they might not get all the way there. But I guarantee you that by doing nothing, you're in a dangerous spot, right? Because no one else is doing nothing, and so other people are moving. And so don't let perfect be the enemy of the good here, right? Take an action, take a step, right? Lean into your partners, and that gives you at least a fighting chance to defend yourself from these fraudsters.
At a certain point, it becomes almost irresponsible not to innovate, right?
Right.
So.
Yes. Look, and I think that's bring that back to the American FinTech Council, right? It's about responsible innovation, right? And so the flip side of that coin is you're irresponsible if you're not innovating. I was with an event yesterday where the senator from Ohio was talking about innovation, and he was talking about the fact that, right, it's just table stakes, right? You have to bring that to the table in order to survive. And I'm going to direct our question that came in through the chat to you, and I'm happy for others to weigh in here. It's around a fintech and how a fintech would get your sponsor bank and the regulators on board with these RegTech solutions, right? We talked a lot about kind of tools and capabilities and the value of leaning into technology in the compliance area. If you're a fintech, how do you get your sponsor bank on side?
Well, I think so. I've spent a lot of time around sponsor banks and in that space, and I feel like the good news is that they work so closely with they partner so closely with fintechs historically that they're constantly on the cutting edge, right? Their partners are always pushing them to the next thing, to the next thing, to the next thing. So the good news is I actually think they're quite comfortable with the process of coming to their regulators to talk about new things. So I think in my experience, they actually move faster than larger institutions because they're used to the process. And the regulators, what seems to me, are used to the fact that they're bringing new things to the table. Obviously, they want to make sure that the vendors that they're choosing, that their process that they're going through, the vendor oversight is 100% tight, right? And that all the regular rules apply. But I think there is openness to innovation, and they're used to the process of bringing new things to the entities that oversee them.
Yes, I like the terminology before, right? No one's going to fault you for more transparency. So if you're engaging with your regulator or your sponsor bank, you can be more transparent. You should have a sympathetic ear there with those audiences. All right, we have used up about our allotted time here. I know we could probably keep going, so I appreciate the hearty discussion, the lively interaction, and all the thoughts that were shared by our panelists here. Right, we covered a lot of ground here, from having to respond faster in the market and being proactive, to this trade-off between growth and expense and safety and speed. So I think that was a great jumping off point. And then really getting into the practical examples, whether it was the contextual analysis of videos, or whether it was asking about evaluation sets of data, taking risk-based approach. I think hopefully our audience here heard some real specific ideas that they can lean into. I know that our friends at the American FinTech Council will share all of our contact information. So for any of our audience that would like to drill into a conversation with Kunal or John or Anna, I think Denise will be a point of contact to facilitate any sort of follow-up. So with that, Denise, I'll turn it over to you to close us out here. Thank you.
Yeah, thanks, guys. That was a great dialogue. So again, we appreciate you all joining. I'll be sending up a follow-up email with the link to the recording if you'd like to revisit, along with a special discount code to our policy summit, which will be taking place next month, November 18th in Washington, D.C. And again, if you have any questions or any follow-up, feel free to reach out to me. So thanks again. Have a good one, guys.